What in the world is going on with the real estate market? Are we headed for a crash? Are we in a housing bubble? On today's video, we're bringing you market stats, home values, and time frames. That's what we're talking about on this video. Stay tuned. What's up, everybody? I'm Rob Wozner, a local realtor here in beautiful Southwest Florida. If this is your first time on my channel and you want to know everything about eating, sleeping, working, playing, and especially the real estate market, this is the channel you need to subscribe to. So take a minute, hit the subscribe button, and tap the bell so you're notified every time we drop a new video. So are you thinking pretty hard about buying or selling a home and you want to know what the housing market will look like? Well, housing market predictions are about as reliable as weather forecasts. No one can predict what's going to happen with 100% accuracy, but we can check out what the real estate experts are saying and make some pretty good guesses about the future from there. Remember, a housing market forecast can only give you an idea of what to expect if you buy or sell a house in the coming months. Never let it control your housing decisions. Only your personal situation and your finances should do that. Just this week, the National Association of Realtors chief economist, Loris Yun, spoke before the U.S. Senate Committee on Banking, Housing, and Urban Affairs as they dig deeper in an attempt to understand what is actually happening in the U.S. housing market. Yun told the committee that he doesn't foresee a nationwide decline in home prices, despite indications that price growth is set to slow. He testified that the potential for weaker sales should increase available for sale inventory in some markets, but not enough to diminish persistent affordability constraints that for many Americans have kept home ownership out of reach for many years. He went on to say that in the near term, he does not expect the situation to change appreciably. Historic undersupply in the market, combined with continued demand, will likely drive ongoing issues with affordability for many Americans. Any short-term price adjustments, if they occur, will be less consequential compared to the immense longer-term housing affordability challenges we face as a country. When the Federal Reserve essentially went all in the early months of the pandemic, the decline in mortgage rates and the cautious reopening of the economy boosted housing demand. The housing market always responds to changes in mortgage rates. When we take a look at interest rates, which have been consistently in the 4 to 5% range in the decade preceding COVID-19, hovered near record lows around 3% throughout much of 2020 and 2021. The National Association of Realtors' most recent existing home sales report found that the average commitment rate for 30-year conventional fixed-rate mortgage in June was up to 5.52%. Any increases in available inventory observed over the first half of this year have been offset by the corresponding increases in consumer costs. We have to understand that interest rate increases of roughly 2.5 percentage points have added about $800 per month to the median priced home payment. This affordability crunch is felt most acutely as we move down the income scale. Given the current income distribution in America, that is why housing supply must be addressed to moderate home price and rent gains. Now let's talk about what's happening right here in Southwest Florida. Data reflecting activity in the Naples area housing market during June showed signs of a return to pre-pandemic summer activity when market conditions were balanced. Pending sales decreased 36.8% in June to 794 pending sales from 1,236 pending sales in June of 2021. And closed sales decreased 38.4% in June to 952 closed sales from 1,545 closed sales in June of 2021. Now let's take a look across the state, and closed sales of existing single-family homes in Florida are continuing to underperform in 2022 compared to a year ago. According to the latest monthly statistics from Florida Realtors, single-family home sales in June were down over 17% year over year, the largest such decline we've seen so far this year. There were an unusually high number of sales in June of 2021, even compared to months in 2021. So that's part of the reason for such a large decline. Still, there's no denying that this year's much higher mortgage interest rates are taking a toll on the housing market, not only here in Florida, but across the entire country as well. Nearly 21% fewer single-family homes went under contract in June compared to a year ago, as well, indicating that we are going to be seeing lower numbers of closings for the next couple months and even beyond. On a positive side, here in Naples, Florida, we have seen an 80.5% increase in overall inventory during June to 2,294 properties from 1,271 properties in June of 2021. Now, this is obviously expected to spark closed sales in the coming months. It appears the housing market here in Florida is returning to the more traditional seasonal environment. We began to see a deceleration in sales during May, and median closed prices for single-family homes dropped in June compared to May as well. Naples, Florida currently has 2.2 months of inventory available in June, up from 0.8 months of supply back in December of 2021. The journey back to a balanced market is starting to take place. But we like to remind you that it will be a very slow climb. We will remain in a sustained low inventory environment probably for the rest of the year, which will serve to insulate prices in almost all segments of the market. It will prove a story of deceleration rather than depreciation. New listings of single-family homes throughout the state of Florida were up by over 13% year over year in June. Combined with the flagging number of homes going under contract, this led to a hefty increase in the end-of-month inventory. The number of homes actually listed for resale at the end of June was about twice as large as what was available 4 months prior at the end of February. If this current rate of change in single-family inventory continues on through the rest of the summer, we could very well be back to pre-pandemic levels by the beginning of fall, but we'll have to wait and see. Back in Naples, the June report showed 1,169 new listings compared to 1,170 new listings in June of 2021. Now, we still predict sales activity will continue to mirror 2019 trends, which will naturally cause an increase in inventory levels and return us, hopefully, to a more balanced market. As we get back to normal and days on market continues to rise, as they did in June, to 18 days from 16 days in May, and just quickly giving you a sneak peek into next month, those numbers are continuing to rise. As an active real estate agent here in Southwest Florida, I've been hearing lately that people want to list their homes, but they think they should wait for season because they think they'll get more money for it. Although it remains to be seen where values will go from here, what we do know based on the report is that inventory is on the rise. Also, sellers who wait for season to list will likely have much more competition than they would if they list now. So the thing is, would you rather list your house now with less competition, or do you want to list your house with more competition? More competition is going to bring prices down because buyers are going to have more options to choose from and not just choose from your house when there's reduced inventory. Since we've had a shortage of homes for about the past 2 decades, plus demand is still very high, the prices are therefore still high. Because of this low supply and high demand, people have been willing to pay ridiculous amounts of money for homes. In many cases, way more than the appraisal price. This has caused people who weren't even looking to sell their homes to be drawn into the market and become sellers. Okay, first things first, 2022 is not 2021. The crazy time of house selling in the first few hours after getting 20 offers for thousands of dollars over asking price is finished. But the market is still strong, and it's just not crazy anymore. And really, crazy just adds an extra level of stress to the buying or selling of a house. So cheers to no more craziness. One of the things that I found very interesting in the report is that back in June of 2019, we had the same number of price reductions that we had this past June. But in June of 2019, we had over 3 times the number of properties in inventory. So we had a lot more percentage of homes having to reduce their prices based on availability. Now, with that being said, nearly 50% of our inventory this past June had a price reduction. That's a pretty big number. These price reductions should be viewed as new listings because newly lowered prices are now more attractive to a larger pool of buyers. Thus, there are more opportunities for homes for buyers. The median close price in June increased 31.8% to $604,000 from $458,281 in June of 2021. But median close prices for single-family homes in June actually decreased 7.7% to $750,000 from $812,500 in May. Conversely, median close prices for condominiums in June increased 2.5% to $497,000 from $485,000 back in May. The median price for single-family homes throughout the state in June was $420,000, and that's up nearly 20% compared to a year ago. but notably it was unchanged compared to the median price of 1 month ago back in May. This marks the first time that the Florida single-family median sale price has failed to increase from May to June since 2008, an indication that prices are starting to respond to the growing level of inventory available to buyers. Housing prices increased by 29% in 2020 and 18% in 2019. These are unprecedented numbers. But what caused this spike? People coming out of their collective caves after quarantine and diving into the housing market. Prices are still projected to be up 8% overall this year, and 2023 prices are still projected to be up 3 to 4%, which gets us back to the average increase for residential single-family homes throughout the last 50 years. Half of the single-family home sales that closed in June were only on the market for 10 days or less before going under contract, which is higher than in June of last year. But half the homes were selling in 8 days or less back then. But 10 days is still a really short amount of time historically speaking, which indicates that homes are still moving relatively quickly as long as they are priced appropriately. One thing and one thing only drives house prices: supply and demand. Anytime there's more supply of something than there is demand, the price goes down. Anytime there's more demand for something, a lot of buyers chasing a small supply of goods, the price is going to go up. For example, if there's a toilet paper shortage, remember that one a couple months ago? Prices will spike. If there's a shortage of oil and gas because Washington turned off the spigot, prices will spike. And we're still living this one. Real estate is no different. When demand exceeds supply, house prices go up. For housing prices to go down, supply has to exceed demand. Now, the big thing that everybody's talking about are rising mortgage rates, and fears of economic downturn might be influencing some home buying decisions today. Rates right now are rising, but still lower than at historic averages. Despite the cooling of sales in June, cash sales during the month commanded 60.3% of closed sales compared to 63.3% back in May. So will the housing market crash in 2022? Well, it's pretty unlikely that the housing market will crash in the next few years. Experts say the current market is way different from how it was during the housing crisis that caused the Great Recession of 2007 to 2009. Lending rules are much more strict now, so there won't be a bunch of foreclosures. Plus, housing supply is still super low and probably won't catch up for a few years. So there's little to no danger of home prices dropping like a rock. So another question I get asked is, will the housing prices go down in 2022? And like I said, it's unlikely that home prices will go down in 2022 and beyond. Freddie Mac predicts home prices will grow at a slower rate of a more reasonable 5% in 2023, but they're not going to drop in the coming years. It's really hard to predict home prices though. So whatever you do, keep saving for your down payment if you want confidence when it's time to buy a house. If you are looking to sell a home here in Southwest Florida, make sure you work with a professional realtor who has the ability and expertise to provide you with an accurate market comparison in this fast-moving market, manage your showings to the right audience, evaluate the use of contingencies, and help you negotiate any offers that you may receive. If you are looking right here in Southwest Florida, you need to take the first step. Give me a call, shoot me a text, send me an email, however you want to get in touch with me. I have the systems and processes dialed down to make this transaction as smooth and easy as possible. I have your back when buying or selling property right here in Southwest Florida, and I look forward to seeing you on my next video.